Adam, it's one of these times where if you look at the message of the market and try to figure out how it's behaving, you give a lot of credit to saying that we have a pretty bright outlook, right? I mean, in terms of the broadening out of the market, the fact that we have this uptrend, we haven't a down 1% day in a while. It feels like we're scaling this wall of worry. Volatility has dropped. And then if you try to figure out the fundamental inputs that substantiate that kind of market behavior, maybe it's a little tougher in terms of valuation and what's in for the economy. So where does that bring you?
Yeah, I mean, I think what's, in my mind, the rally earlier in this year, I thought, okay, well, part of the reason we're up is just the bear case doesn't seem as likely. Consumer real income's doing okay. You can get a job if you need one. So that explained to me some of the market rally was just a lack of the bear case. But I think in the last 5 or 6 weeks, the lack of the 23 bear case isn't the only explanation. I think now it's a more plausible 2024 or 2025 bull case, which comes down to, fiscal stimulus for decarbonization and, data center build out and sort of industrialization of America. And maybe you dress things up in an election year and maybe China has to do it. And there's an emerging number of possibilities that seems to make people think, all right, maybe 2024 earnings, could represent the beginning of a new multi-year trend. And so that, I think, is gaining steam among investors I talk to. All the while, if you notice, I talked about the bear and the bull case. I didn't mention the base case for this year, which is kind of the same for me as it was on Jan 1, which is we're using about 215 in earnings. I think the earnings are eroding but not imploding, and I think that's what you're seeing during the earnings season. So it's a weird kind of bear-bull change, but not a base change.
Yeah. So, in sort of hedge fund speak, you've kind of chopped off one of the tails to some degree, the left hand.
Yeah, an asymmetry, yeah.
Now, to your point about maybe not that much has changed in terms of the earnings picture, if you go back several months, beginning of this year, just looking at 12-month forward S&P 500 earnings, you were $230 and change, still 230 and change. We went like this, a little bit of a dip and a comeback. Yeah. So the point being, people seem to just be more certain or confident that we can get there on a 12-month forward basis. And then to your point, 2024 is when you start to resume growth. But do you think it's all of those individual threads that you mentioned in terms of, these themes of in the economy, long-term investment type activity, or is it just we're backfitting the story to say, maybe we have a bull market that's acting like one and we got to figure out why?
Look, people always feel excited after a rally. If you're honest with yourself, you've liked stocks. I know I have. I've liked stocks at higher prices than I used to hate them at, right? Mm-hmm. It just happens because the market leads the economy, not the other way around. So what the market's telling you is that the earnings outlook is going to be better than people think, or we're at the beginning of a multi-year run. If one of those two things or both turn out to be true, we're going to get a big correction in the market.
Yeah.
So I think that right now, I think that's, it's definitely some human behavior and psychology. I think it's definitely part of the answer to your question. I think part of it is how plausible is the fact that we're going to have sort of the beginning of a multi-year run in earnings, and it's not, a zero probability thing. I think it's got some teeth to it. I think the other thing that's important, if you look at the year ahead outlooks from all of the major firms and the economists and the strategists into this year, written mostly around last Thanksgiving, zero of those major documents mentioned AI. Mm-hmm. And so while we know AI is probably a little frothy in terms of what people expect and the truth is there are some companies benefiting now, and that was an upside surprise versus, say, last November. So there's some reasons that the market should be up, the low probability bear case, the emergence of AI. And I think there's some that are more speculative. I think what most people struggle with is the so-called equity risk premium, which is sort of the valuation of the overall aggregate equity market versus, bonds, government bonds. And I think that's where people struggle when they say, well, it looks more attractive to buy 2 years and maybe equities are not attractive. That works in years 3 through 10. It has never been a good predictor in a shorter horizon. So I think everyone's trying to figure out, is this the last, kind of wave of optimism or not? My suspicion is maybe it isn't, because I think you can still believe the dream that we're at the bottom for a little while longer.